Hey everyone, welcome back to the channel. Today we're diving into the world of Kenya's Treasury bonds and bills, specifically focusing on the recently announced results for FXD1 2018-025. We'll also break down the risk involved in investing in government securities, including default risk, interest rate risk, inflation risk, and more. Plus, I'll explain why the FXD1 2018-25 bond had a discount rate of 2.7222%. Let's get started. First, let's talk about the FXD1 2018-025 bond. The results are out, and it's clear that this bond attracted a lot of attention. The bond had a discount rate of 2.7222%, which means investors bought it at a price lower than its face value. But why did this happen? Well, it's all about demand and supply in the bond market. When demand for a bond is high, the price goes up and the yield goes down. Conversely, when demand is low, the price drops and the yield increases. In this case, the 2.7222% discount reflects the market's appetite for this bond and the prevailing economic conditions. Now, let's talk about the risks involved in investing in treasury bonds and bills. While these are generally considered low-risk investments, they are not entirely risk-free. Here are the key risks you need to be aware of. Default risk. This is the risk that the government might fail to pay back the principal or interest. While rare, it's not impossible, especially in developing countries where economic instability can affect government finances. However, Kenya has a relatively good track record of honoring its debt obligations. Interest rate risk. When interest rates rise, bond prices fall and vice versa. If you need to sell your bond before maturity in a rising interest rate environment, you might incur a loss. This is why it's crucial to hold bonds until maturity if you want to avoid this risk. Inflation risk. Inflation erodes the purchasing power of money over time. In developing countries like Kenya, inflation can be more volatile and unpredictable. If inflation outpaces the bond's interest rate, your real returns could be negative. Liquidity risk. While treasury bonds are generally liquid, selling them in the secondary market before maturity can sometimes be expensive due to rediscounting. Always ensure that any money you invest in bonds is not emergency funds. Diversify your portfolio with other liquid assets to mitigate this risk. Political risk. Government policies and political stability can impact bond performance. Changes in fiscal policy, taxation, or even political unrest can affect the bond market. Always keep an eye on the political climate when investing in government securities. Despite these risks, treasury bills and bonds are still considered low-risk investments. Why? Because they're backed by the government, which has the ability to raise taxes or print money to meet its obligation. Additionally, they offer predictable returns, making them ideal for conservative investors or those looking to balance riskier investments in their portfolio. Now, let's break down why the FXD1 2018-025 bond had a discount rate of 2.7222%. This discount reflects the difference between the bond's face value and its purchase price. The lower the price you pay, the higher your effective yield. In this case, the 2.7222% discount indicates that investors were willing to accept a lower price for this bond, possibly due to factors like market demand and supply dynamics, prevailing interest rates in the economy, and investor expectations about future inflation or economic stability. This discount ensures that investors are compensated for the risks they're taking, especially in a developing market like Kenya. To wrap up, investing in treasury bonds and bills can be a great way to preserve capital and earn predictable returns. However, it's essential to understand the risks involved and diversify your investments to protect against inflation, liquidity, and political risks. Always remember, never invest emergency funds in bonds and consider holding them until maturity to avoid interest rate risk. If you found this video helpful, don't forget to like, share, and subscribe for more insights on investing and finance. Let me know in the comments if you've invested in FXD1 2018-025 or any other bonds, and what your experience has been. Thanks for watching, and I'll see you in the next video.